Finally, we got a deal there at COP27. Now to our first conversation ahead of the Monetary Policy Committee meeting of the Central Bank of Nigeria, scheduled to hold today and tomorrow. The International Monetary Fund has called for decisive and effective monetary policy tightening to prevent risk of de-anchoring of inflation expectation. The IMF also made other recommendations. For more now, let's talk to Paul Alaje, senior economist, SPM professionals. Join us via Zoom. Great to have you on the program. I didn't catch that. I don't know if you're muted. Can you hear me now?
Good morning, and thank you so very
fantastic.
much for having me.
Fantastic. I can hear you now. So, you see the IMF there, they're recommending, tightening ahead of today and tomorrow's decision. So we've had, previous, jumbo hikes, in the previous meetings. Any signs, any positive signs, from the previous hikes?
Well, what I could say with the previous hikes is that maybe we would have had inflation higher than what we had if the hikes have not been done, have not been implemented by the Apex Bank. But thankfully, the Apex Bank has increased interest rate from over 11 now to over 15%, even though we are still seeing inflation showing its head at over 21%. And the inflation seems to be on multiple phases. It seems to have defied monetary controls, as we have seen inflation in rural increase by over 5% year on year. Same with urban. It seems to be a twin impact on both rural and urban centers of Nigeria, as both has increased by over 5% within the same period of 2020 to from 2021 to 2022. So IMF is recommending further tightening. This may have implications on investment, it may have implication on employment, it may have implication even on growth. But what is certain is that monetary, and what is monetary mandate, is to ensure that we have stability within the economy.
Yeah, and looking at it right now, we're seeing that recommendation of further tightening by the IMF. What do you think? Do you think we need further big rate hikes going forward?
Can you repeat that, please?
So we see the IMF recommending, more tightening, at the next meeting that's happening today and tomorrow. Do you also recommend, further hikes, and by how much?
Well, we might see about 16. But what we know that monetary authority will not do is to lose right now. Anybody that that is trying to reduce interest rate is calling for a disaster.
I don't know if we're having issues there. It's I think you're getting frozen there in and out. Okay, yeah, having little issues there with the network. But let's hope it gets better going forward. Do you think we know with the Naira redesign, that's been a hot topic, for most of the month. Do you think it's going to aid, with MPC decision this time?
Well, I'm very hopeful that the Naira redesign will help. With what I've been seeing on social media, especially on my Twitter handle, a number of persons have tagged me and also sent direct messages to me regarding those that have turned their walls instead of wallpaper. They've made it a money wallpaper where they have arranged money neatly in their homes, turning their homes to a vote of some sort. I believe that the impact of monetary policy in Nigeria will start having positive outcomes. This is because when monetary policy authority increases rate or reduces rate, as the case may be, referring to MPR and other rates, and 80% of money in circulation are within the banking control, then it calls for a lot of concern. But with this development, I strongly believe that there will be a positive note because we can rightly control what is within the system. So going forward, after the implementation of the design of money, I strongly believe that monetary authority will have a hold on the economy.
And also, we've had a lot of volatility in the Forex market, and we see the IMF there asking the CBN to allow banks control dollar rates. What do you think?
Well, it's a very complex situation right now. Bank has managed dollar rates. We didn't see any progress. We have also seen that BDC have also helped central bank to make FX available to the public. It was worse off. Central bank did it, and we have not seen any improvement. You see, Nigeria, we want to eat our cake and have it. We love shortcuts, and if we don't do the right thing, unfortunately, we'll be looking for mitigants, we'll be looking for short corners, we'll be looking for short-term solution. We will not have the permanent solution. And if you ask me, Central Bank of Nigeria cannot print dollar. So what is important for us to do is to find solution to this on ending dollar demand. We have people who are speculating on Naira on one hand, and I hope that government will take decisive decision on how to end that. But let's look at real issue. The real issue is that the GDP component, the production component, manufacturing and production of our GDP is around 10%. What we need is 40%. That is what we are producing today. We need a minimum of 300% increase in this. We cannot do that if power is not available, electricity, if energy generally is not available. We cannot do that. So what we should be communicating is for fiscal authority to work in this regard with monetary authority to ensure that private sector make available required amount of energy, either as electricity or gas. So it's important for us to have this. On that hand, secondly, we need to attract enough foreign investors. If you look at this data shared by National Bureau of Statistics, since 2017 or 18 to date, we have been seeing a downward trend, even though it oscillates sometimes. But what we have seen when you draw the line is that the investment into Nigerian economy have continued to nosedive, continued to go down. And what do we think are the challenges or the real issues there? They are institutional problems. We have problem of insecurity. Nobody will hear that America wants to order their citizens to leave our country, and you want to invest in such country. I don't think anybody will want to do that. I think we need to really talk and beyond talk to walk the talk on this insecurity in Nigeria. We cannot hear that some people are trying to invade Abuja, the Federal Capital Territory of our nation. We don't have any other. So, and beyond Abuja, Lagos, every part of Nigeria is important. So we need to solve this problem by ensuring that we have significant amount of investment in our country. So having said that, the last point I would like to say is, how do we improve our export? How do we improve export? Export in Nigeria is also reducing by the day. So even now that the value of Naira is weakening, we expect that people will therefore embrace export so that they can become richer and economic prosperity can affect all in Nigeria. But unfortunately, this is not the case.
And looking at this Forex issue now, given all that's happening, with the economy right now, being an import-based economy, what does the central bank really have in its arsenal to tame this market, strengthen the Naira?
Well, what central bank can do is what central bank is doing. First is working with the anti-graft agency, talking about EFCC, to arrest those who are perpetrating evil. We have also seen that the Central Bank of Nigeria embarked on, RX 200, trying to repatriate about $400 billion worth back to Nigeria economy. We have also, so those are the things central bank can do. And each time we borrow money, we have also seen the impact of borrowing in terms of FX, which goes directly into our foreign reserve to boost the capacity. But when you look at foreign reserve, we're around 30 billion plus dollars. It's very low when you compare that to what China is doing and a few other countries, developing countries. We are doing really, really very poor. So it is until we adopt the points I mentioned earlier, which includes production, increasing your production component of GDP to about 40%, which is the baseline, which is the minimum we should do, and also encouraging exports, and more importantly, attracting foreign direct investment in the real sector. Unfortunately, if we don't do all of this, We have said the economy cannot stand on one leg. Monetary authority is just one. We need fiscal, and more importantly, we need trade authority to align with the vision of the central bank this time.
We see the expectations that the CBN might actually devalue, the Naira next year, maybe after the elections. What impact can we expect from that?
Well, when you devalue in a developing economy that is import dependent, your people will have the negative impact. In theory, we say when you devalue, you discourage people for import. But the question is, what alternative do people have? The person watching us this morning, is the TV is using to watch, or the phone he has, is it made in Nigeria or imported? If it's imported, there is double trouble for on his head or her head, as the case may be, because you still have to import. So the challenge many African countries have is, how do we have import substitution? You cannot have import substitution if there are no infrastructure. It is not monetary authority that will build infrastructure. It is fiscal authority that will build infrastructure. In the meantime, in the medium term, you need trade authority to align with monetary authority so that you can reduce the pressure. Unfortunately, African leaders, including Nigeria, obviously are not thinking in this direction.
All right, so tomorrow we're supposed to get the decision from the MPC. What are you expecting?
Well, I'm expecting an increase in MPR to between 16 to 16.5, because inflation rather than TEMI is still really on high jump. Now jumping over the roof. I hope it will not go worse than 21%. But when I tell you projection, inflation is currently eyeing 22%. With what is happening currently in the country today, with gas and with the number of other things that we're experiencing, with price of rice, price of commodities, I can tell you that currently inflation might be eyeing 22%. But so how do the monetary authority respond? Is by increasing rates. That is one of the things they have in their arsenal. But will that be enough without trade authority, without fiscal authority doing their part? And I know that we cannot increase rates indefinitely, because that in itself has negative impact. Impact includes crowding out of employment, crowding out of jobs, crowding out of investment. We have to choose in the coming days which one is a lesser evil. And I hope that eventually we are going to have this convergence between the three key authorities: the trade, the monetary, and more importantly, the fiscal authority.
All right, we'll be watching out for Decision Day. That's tomorrow. I'll be covering that right here on Business Incorporated. Thank you so much. That was Mr. Paul Alaje, Senior Economist, SPM Professionals. It was great having your perspective.
Thank you so much for having me.
Thank you. All right, we've been talking state of the Nigerian economy. We'll take a break now. When we come back, we'll look at employee compensation in Nigeria as growth slows. That's in a moment. Just stay with us.